So I'm so curious because I just had a buyer who sold a young lady, 24 years old, who was able to get I think $100,000 in funding.
Yeah, I believe even possibly a little more in very low interest
Yes.
down payment assistance,
Yeah.
some 0% interest, I believe.
Hey everyone, thank you for tuning in again and welcome back to another podcast here at Five Stars Realty with your host, Doris Tinajero, Director of Growth. And today I have an important person here, President of HDF, Jaclynn
Alves. Yeah.
Yes, okay. Sorry about that.
Hi, Doris. No, thank you for having me.
Yeah, thanks
my
for
name
coming.
is Jackie Alves. I am Director of Residential Lending for the Housing Development Fund. We are a HUD certified counseling agency and a CDFI, which means we're a community development financial institution.
Okay.
So we do both kind of counseling as well as lending. We allow for first-time home buyers to be able to purchase within the state of Connecticut, and we also service New York. We are going to focus on Connecticut and what we have to offer in Connecticut today.
Okay, that's awesome. So I'm so curious because I just had a buyer who sold a young lady, 24 years old, who was able to get I think $100,000 in funding.
Yeah, I believe even possibly a little more in very low interest
Yes.
down payment assistance,
Yeah.
some 0% interest, I believe.
Yeah, so I was like dumbfounded by that. I was so proud of her. She was very diligent, she did her homework, but she wanted to make sure she wasn't letting go of that HDF. I didn't understand it when I first met her, but working with Raphael from M&T Bank, who unfortunately can't be with us today, but he was amazing helping me understand a little bit. He worked with the listing agent, so it was great, but I feel like it's a hidden gem.
Yeah, we say that a lot. We're kind of a little bit of like Connecticut's best known secret. We're trying not to be a secret anymore.
Yeah, hence why you're here.
So we rely heavily on our partners. You mentioned M&T, Raphael is one of our partners. We do have specific partners. We work with 16 banks throughout the state, more community investment banks rather than the large corporation banks. And we rely on them a lot with our marketing and trying to spread the word. But one of the points of that is that our partners know our programs. So it makes it a lot easier for the borrower to be able to understand when we have that relationship and we can discuss with them. They know exactly the process and how to get through. So
Okay, so let's start with where would somebody go to find HDF? What are the requirements? How does one apply? Let's walk through the whole process on your end first.
So the main portion of it is our website. That's going to be the landing page for most of it. That is where borrowers can start their application process. That's where they can get all the information as to what programs we have. And the website is HDF. So the Housing Development Fund, we abbreviate to HDF. It's hdfconnects.org.
Okay, so you'll be able to get it here on the link below, hdfconnects.org. Okay.
Correct.
Yep.
And what that does is that's your landing page. So it lists all of our lending resources. It also lists how to get started.
Okay.
So the first point is to get started. You would start making your application in the portal. So you would upload your initial documentation. And we look for the same things that the bank does. So we're going to look at your tax returns and your W-2s and also pay stubs.
Okay.
We pull a soft pull credit report in our counseling sessions, and so that will not affect your credit score. What the soft pull does is give us a basis so that we can look at it and ensure that you are mortgage ready.
Okay.
The first step for us is to start your application there. You're then assigned a counselor. So we do require all of our borrowers to go through counseling first, and they sit with a counselor. They review a budget, they review their credit report, and the counselor will assess them for both eligibility for any of our programs as well as mortgage readiness.
Okay.
So they'll let them know if there's things they need to work on or if they're ready to purchase. And then from there, they are given the list of our participating lenders. They can go to any of our lenders to get pre-approved. Then they would find a realtor and hopefully find a home, put in an offer, and they would come back to us for their lending. So then they would come back to us and start the actual application to get down payment assistance from us.
Okay. So let me just recap that really quick. You go to hdf.connects.org.
Correct.
And then you fill in the application in the portal. You need to download all of your documentation, everything that they're requiring. It's sort of kind of like with a lender, but it's a private entity in itself.
Yeah, so we are a lender, but we're CDFI, so we're not a federal bank.
Okay. And then once you have all of that paperwork done, then HDF will assign an advisor that's different from a lender.
Correct.
The advisor will make sure that you have everything that you need in order to get qualified.
Absolutely.
Okay.
And that the counselor will do is look over and make sure that you are eligible for the programs. They help you throughout the process so that you understand the process. There's a lot of people involved in purchasing a home. There's inspectors, there's realtors, there's attorneys. So they really take you step by step to ensure that you are knowledgeable about what you are receiving and the process to go through.
Yeah, when my client came to me, I didn't even need to do the whole buyer consultation with her because she already knew everything.
Right.
She already had people in place. It was pretty amazing.
Yeah, so what we're doing is basically trying to set them up to ensure that the borrower buying a home for the first time is really stressful. And there's a lot of paperwork that goes back and forth. So we just want to ensure that everybody is educated, that they're knowledgeable, that they know what they're getting into. Our main portion is not just getting you into the home, but we also want to make sure that you're able to sustain the home so that you really know what you're getting into with home ownership.
That's awesome. Now let's go back to the part where, or let's continue actually.
Yeah.
So you finish the application, you do the portal, you talk to the advisor, and now what?
So now the advisor would send you off, basically say you're mortgage ready. So they would go to a lender and get a pre-approval.
Okay.
And as most people are aware, the pre-approval kind of lets you know where you can start looking for a home, what you are approved for, what you could purchase for. And then they would obviously give it to the realtor, and the realtor would then find them homes.
Now, what's the difference between the HDF money and the pre-approval money? Because it was two different loans and we needed to go through two different approvals for everything.
Yes. So while you have to get a first mortgage, so the way that it works with our down payment and closing cost assistance is that you would get a first mortgage from one of our participating lenders. So they still have to do all of their work for their mortgage. They have to run all of your credit again. They have to do all of that. They have to collect all the paperwork and fully underwrite that loan. We have to do the same for our loans. So if you're getting another loan from us, it's a whole nother mortgage. So we have to do the same process. We fully underwrite, we fully close on our own. So we do all of that in-house. So it's two separate processes, one with the first bank, one with us, but we run in conjunction.
And now the benefit of your loan is that it's zero interest, correct?
Yeah, so we have a couple of different programs. Our main program is our Smart Move program. That is for down payment and closing cost assistance. It's up to 25% of the purchase price or the appraised value. And that is a 3% interest loan. So that one does have a monthly payment. It's a second mortgage. The reason for that one is to give you up to 25% to eliminate the need for private mortgage insurance.
Okay.
So private mortgage insurance is something that the bank makes you have in place if you have less than 20% to put down. And with rental prices and all of that, most people don't have that savings. And so we give you the 20% essentially to put down to eliminate the need for private mortgage insurance.
Awesome. So eventually you're conventional.
Correct.
Awesome.
Yep. So then you would pay us the 3% interest mortgage payment, and that eliminates the need for private mortgage insurance, which helps you build equity a bit quicker, pay off your loan quicker, instead of paying just the insurance premium. That's not helping you in the long run.
Right, because I think I've done the math before where I strongly don't advise people to have a PMI because we're talking $30,000, $40,000, $60,000 in the term of the year that isn't going to your principal or
isn't helping you. Yeah.
So that's amazing.
Yeah. So with that, we have a bunch of other programs that are anywhere from 1% to 0%, depending upon what you're eligible for, that can all be layered and stacked.
Okay.
And so essentially any of those with the 1% loan, they're helps you to layer. That's an even lower interest rate. When you're looking at a first lender that has, 6 to 7% interest rates in this market, anything at a 3 or 1% rate is really going to help you and help you increase that purchasing power. Same with the 0% loans.
Okay.
Those loans don't affect your monthly payment, which is great, which means that you can essentially stack and layer them all. In this way, you're able to increase your purchase power without affecting your debt.
Now, let's help the audience understand. A loan that's at 3% with you, that's a payment. It's a one-time payment altogether, I'm assuming. No, it's a separate payment.
Separate monthly payment.
That they would be paying directly to you.
Correct.
And then assuming 6 to 7% interest rate loan
On the first.
On the first.
Yes.
Okay.
So they make 2 payments each month. It's set up just like your first mortgage payment is. We have a servicer and all of that. So you can set up your automatic payments. So rather than paying what may have been, a $2,000 payment to the first with your MI, you could be paying, $1,600 to them and $200 to us instead.
So you're still saving.
Correct.
Okay. And what's the average applicant look like when they're under that program? Like
So we do service, like I said, we service all of Connecticut. We do focus on low to moderate income borrowers. We do have income limits for each of our programs. The majority of our borrowers, the average profile, our borrowers somewhere around 80% area median income for their area. Usually a family of two to 3 people, generally somewhere in their 30s. And the good thing about us is that we allow you to retain any savings that you have. So we don't have any asset caps. We require you only to put 1% in. So we know it's hard to save money. So anytime somebody can save money, they obviously don't want to dump it into a home and then not have anything to proceed to live in that home. Most properties, you want to buy furniture, you want to be able to do something. And so
fix it up.
Correct. Yeah. Especially with properties in Connecticut, a lot of them are older and they need some work. We don't want people going into the purchase and having no savings left. So we only require them to put 1% into the transaction, whereas most banks require anywhere from 3 to 10%, depending upon the program.
Yeah. Okay. Now let's go back to, you said 30s, like that's 30,000 income, 30.
No, so it depends on the area,
Okay.
I would say. It ranges obviously drastically throughout Fairfield County to Hartford County, but our borrowers are generally about 80% of the area median income for that area.
Okay.
So most borrowers, I would say probably household incomes range, the average is probably about 70,000.
Okay. Okay, that's good to know because that's the average, right?
That's the average throughout the state.
Yeah.
So obviously there's more expensive areas in the state than there are in different places. But we have had a couple of borrowers, who have literally bought a home for, $250,000 and had a first mortgage of only $100,000 where they have gotten additional assistance. So in addition to our assistance, there's other programs in the state that we pair well with them and are able to what we call layer or stack the loans to get you the most bang for your buck.
That's what my client was able to do. So my client was able to have TTO. So she got the $25,000 from TTO. Then she got HDF, a little bit over $100,000. And then she was able to get her loan from M&T Bank,
right,
which was amazing. So she was able to buy a $500,000 home.
Right, at 24.
At 24.
Yeah. On her own.
All on her own. That's crazy. All right, that's amazing. Now let's walk through the process of we've got an offer accepted. And we're
moving forward.
More important.
Okay. So we have an offer accepted. You have your signed binder. At this point, you would alert your lender, correct? And so you would alert your lender and say, hey, we have a signed contract. Here's the property information. Now, we've already collected your tax returns and things like that. So same with us. You would contact us, say hi. You would contact your advisor and say, I have an accepted offer. And they would say, great, this is the documentation we need. It'll be the same thing that the first bank needs. So we always tell our clients, make 2 copies of everything because you're going to have to share them. And then we both, the first lender and us, will go through the same process of fully underwriting, making sure that everything is the same as when we pre-approved you. And then you would move forward to your closing and move on.
Now, even though it's conventional, one thing that I saw was through the inspections. The inspections are mandatory.
Correct.
You cannot waive inspections.
We cannot.
You cannot waive mortgage contingencies. You cannot waive anything. You're gonna, as the one that's letting the
Correct.
money be borrowed, you're wanting to secure that the home is a good home.
Absolutely.
Yeah.
So again, we don't want our borrowers going into something that is going to cost them, or they aren't going to be able to afford within the first year or two making repairs on things. The main issues that we look at are safety and soundness issues. Anything that is going to affect your health of living in the home, that's what we're going to focus
Right.
on. We're going to focus on if there is mold, radon,
Right.
lead paint,
Yep.
or any severe structural issues.
Yeah.
Those are the main focus points.
Those are all our negotiation points as well.
Right.
And
we always,
roof.
right. That's something that's discussed during their counseling appointment. These are all pinpoints where you can use them as negotiation tactics. Let your realtor know that this is what you want to do, but we do require the full inspection.
Okay.
If there are severe issues, we're not going to deny the loan, but we will require that you do have the funds to make those repairs after closing.
Okay. Now, what about working with the listing agent? Because a lot of people haven't heard of HDF, what's one thing that realtors who do work with HDF, because I do have another colleague who's working with an HDF client, what's something that they can use or fall back on to be able to work with the listing agent to fully understand how to win the offer for the client?
Yeah, I think it's difficult. Again, education's a big piece of this. A lot of people don't know about us, so they don't understand. One thing to reiterate is that I just told you our clients have to go through a counseling session. They have to be advised, pre-approved first. They're going all the way through. So our clients are ready to purchase. Once they have that eligibility letter and their pre-approval from the first, they're more than 90% of the way there already. So it's not as if they can't afford the home, so they have to get additional assistance. They're making a good financial investment at this point. Even if they had the savings, which by all means keep your savings, but it just makes the better choice to take a 3% interest rate than a 7% interest rate. So I think just educating realtors that down payment assistance doesn't mean that it is a borrower who isn't going to be able to get the loan. It just means that they are able to acquire additional help. Those are the big points that we kind of go through, is just trying to let realtors know that, this shouldn't be something that they're penalized for, our borrowers, that they're actually making the correct investment and that they're working harder to get there.
So are you familiar with our smart, our 4-page smart contract from MLS? Or
No. Okay.
Okay. So something that is, that I had a hard time helping the listing agent understand was when we actually did the, Section 4 of our contract, where it's the purchase price, then the EMD, and then the deposit at closing, and then the total purchase price. So can you walk us through that, how that, to break that down, or that would be like a lender?
So mostly what we reiterate is that although they're getting all of these down payment assistance programs, and you can correct me if I'm wrong, but I believe that you are responsible to disclose that there is down payment assistance, correct?
There's a HDF program.
But I am unaware if you have to disclose the amount of different programs individually, or if you can just do one lump sum.
You just do one lump sum.
Okay.
Yeah.
And is that where the holdup is? Is that they're looking at? Okay.
Yeah. So that was my holdup with the listing agent, and Raphael did an amazing job explaining it to her. I just wasn't on the call.
Okay.
So I'm not educated in that aspect.
And so I would say making those points that the borrower has already gone through a rigorous process. They've already 90% of the way through, that these programs are mostly state funded and have, the underwriting criteria in place, where it doesn't mean that that the borrower can't afford it. It just means that the borrower is seeking additional assistance. And that, again, it allows the borrower to keep as much cash in their pocket to be able to, sustain the home. Things like that, just reiterating that that having down payment assistance doesn't incense that the borrower is unable to afford the home.
I get that.
Yeah.
I'm just curious, or I guess it's a low inventory right now market. So it's really competitive out there.
Yeah.
So when my client is being represented with a piece of paper, how can I make that piece of paper stand out with HDF?
I think just kind of letting them know that we've been around for, 30 years. We've helped over 3,000 clients throughout the state of Connecticut that are, the funding is always there. It's not that it's going to run out. We have fully funded programs. We allow our borrowers to know exactly what is fully funded and when. They've already gone through the process of underwriting, and that these programs are generally there to benefit not only the client, but also the seller, because they're able to increase their purchasing power and really afford the home that they're getting into.
Okay, so going back to my client, she had $20,000 out of her money to put down as an EMD, so that was really strong.
Yeah.
That had nothing to do with HDF or with her primary loan. So it's just back to square one, where it's just the client needing to have that strong EMD deposit, and then you guys just back up the funds.
And that's the other thing that is helpful with our funds, is that it allows the borrowers to keep that money so that they can make a stronger deposit rather than having to, put all those towards the closing costs on a larger first or things like that. They're able to kind of hold into that money. But yes, in this market, cash speaks. Most
cash is always king.
It's always king. And so, but to be fair, a lot of our borrowers are getting, the homes with only 1% down.
That's awesome. Yeah.
Obviously, a strong offer comes in as a strong offer, regardless of financing. Anytime that you have more solid cash to put down, it just looks better.
Yeah, absolutely. So again, guys, this is Jaclynn Alves from HDF. If people wanted to get in touch with you, Jackie.
Yeah, so obviously the website is there. You can click on the FAQs. There's also, feel free to reach out to me directly. Our contact information is on the website for me directly, but it is jalves@hdfconnects.org. Every file is different, so if you do have some specific questions, any realtors have specific questions on a borrower that they're looking at, would like to know a little more information before starting the process, I'm happy to answer any of the questions.
And when you connect somebody with an advisor, one thing I didn't do with this client was actually meet the advisor or speak to the advisor. Would you advise realtors to actually connect
Absolutely.
with them? Okay.
Yeah. So there's a lot of information, and some people don't always share all the information. You may know things that we don't, that would help this run a lot smoother. And also, we always try to establish those relationships, not only with our partners, but also with the realtors, because, like I said, a lot more information up front than we do at most points.
So how would the realtor be able to connect with the advisor?
So the borrower has all the contact information for the advisor, so they could, get their contact information from them as well. It's also, we have a very small company. We're 25 employees. We have 5 counselors right now. And so just either reaching out to me, I can let you know who the counselor is on it. Or if you just go on the website and look at all the counselors there, feel free to reach out to one of them.
Oh, okay. Awesome. I wish I had known that.
Yeah, they'll direct you where you need to go. We're very happy to.
Not that my client wasn't, she was.
No, she was great.
She was amazing.
Yeah.
Oh my gosh, she blew me out the water.
Yeah, she was great. It was a very smooth process. Helpful that we had a good partner that knew our programs as well and knew how to get the documents through that were needed. But yeah, it was a great transaction all around. Very easy transaction. She was very thankful. She was very helpful in providing what she needed to provide as well. So.
Yeah. So before I let you go, is there anything else that you feel that the audience needs to know?
Just that, down payment assistance is there. Homeownership is available. It is really something that, if you want to look into, our advisors are not only for if you're ready to purchase. Once you're a client with us, you're a client with us until you purchase. If you're just kind of thinking about whether or not homeownership is for you, if you could even obtain homeownership, meet with a counselor. Go through it. They'll let you know kind of the steps. They'll know where you stand. They'll help you get to the next step. If there's some things on your credit that you need to fix or anything like that, please do so. It's free of charge. Awesome. The only thing you're going to pay for is a $25 soft pull credit, so it's not going to affect your credit score. And it allows you to get a really good look at where you stand and how to move forward. And then on top of that, I'm just going to point out again, we have a ton of programs that come in and out, ranging from 0% to 3% financing. Those don't change. It's not going to go above 3%. They're fully available, and really to take advantage of all of that while you can. They pair well with other state programs, House of Hartford, Time to Own, Yale funds, all of those. We've layered it, Federal Home Loan Bank funds. A lot of our partners have different programs that they can combine with. And so really just to get the most bang for your buck and be able to get the client into a home and increase their purchase power, it really is helpful.
That's amazing. Like, I had never heard of Yale.
Yeah, so if you work at Yale, they have Yale funds. There's the employer will match funds for down payment.
Wow.
The city of New Haven has funding as well.
Okay.
So
Look,
yeah,
these are all gems that
there's all gems, there's all little pockets, and that's what our advisors do. They know
Okay.
kind of what the programs are in the state, where you can where you're looking. They can give you more resources on that as well.
Okay, cool. Okay, well, I'm super excited. So, guys, if you are looking to purchase a home and you need a realtor and you need somebody to connect you with Jackie, I am your girl, your
Absolutely.
go-to girl. Would love to connect you, get you at least $100,000 in funding at 3%. That's a
Crazy.
no-brainer.
Yeah, it's a no-brainer.
Combined with TTO, and if you work at Yale.
Yeah, or our programs as well. So we have a Live Where You Work. If you're purchasing in the town where you're purchasing the town where you currently work, we have a 0% interest program for that.
Oh, wow.
For $20,000. We do have an equity fund for BIPOC borrowers at $20,000 at 0% interest.
So when I'm the girl that likes to think outside the box, so this is like outside the box kind of funding. So let's connect. And Jackie, I want to thank you so much for coming and for giving me your time. I mean, you just blew my mind.
Thank you. It's been great. And yeah, there's a lot of programs. There's a lot of stuff out there. So it's really just helpful to kind of educate our realtor friends and let them know that we are there and there is possibilities.
Awesome. Well, I appreciate your time. And until next time, everybody, this is Doris, Director of Growth at Five Stars Realty. See ya.
Thank you.